Excellent. Thank you, everyone, for joining us today. Thank you to our panelists for being here. Really appreciate it. Wanted to start off today just talking about how really we want to focus on mobility, the changes in mobility, and how those changes are rapidly affecting the insurance industry today, and what we can do for cross-collaboration and also making actionable points to make sure that we're adjusting to those changes. So with that, I wanted to start off by just giving everybody a chance to introduce themselves and briefly go over what it really insurance and mobility kind of means to you in your eyes.
Okay, I'm Yoshi from Tokyo Marine. I'm not from Metro Mail or Stanford, but this is where you laugh. Okay. The Tokyo Marine is one of the largest insurance company in Japan, and nearly, as you may know, nearly 40% of the profit is coming from outside of Japan. So the mother market is Japan too, but we are somehow to bring the new business model or technology to our group companies. So our mission is to source new technologies to bring our new service to our group companies. And we have 7 people in the Silicon Valley, and for each of us looking at a different area of business. For me, I'm looking at the mobility, and the other persons are looking at the healthcare, somebody looking at the claim services, something like that. So this is the things. And I'm very excited. For me, my background is auto. For 20 years, I'm engaging in the development of marketing and underwriting, pricing, something like that. I'm very excited to hear, and I'm looking forward to discussing with all of you. Thank you.
Thanks, Yoshi and Shelby. Hello, everybody. I'm Shobana Shankaran. I lead the global insurance vertical at a company called Nauto. We're based here in Palo Alto. Nice to be back at Plug and Play. We were one of the first batch startups at Plug and Play InsurTech when Plug and Play InsurTech was before it was formed. So it's great to be back. Thanks to the Plug and Play team for hosting us. I mentioned I lead our global insurance vertical. Nauto is a 4-year-old company, and we have operations in the United States, also in the Japanese market, as well as in Western Europe. We're an AI technology company, a hardware and software solution that's deployed in high utilization commercial fleets. We're focused on improving driver safety from commercial fleets. And commercial fleets is a very heterogeneous segment, as you know, is passenger transportation, logistics, last mile delivery, ride sharing and car sharing. So there's a lot of intersection between consumer lines and commercial lines. And we're learning data on driver behavior, what constitutes safe driving in high density environments, and using that to inform use cases in autonomy. So some of our partners include OEMs such as BMW, Toyota, and General Motors, where each is developing its own autonomous roadmap that's informed by the data that Nauto collects using real-world environments. Prior to joining Nauto, I spent most of my career in P&C auto insurance at Esurance and Progressive, where I started out. I'm very personally excited by the intersection of insurance and mobility, just the convergence of using more data, technology, and analytics. I think insurance and yoga do go together, so looking forward to talking more about that today.
Hi, I'm Josh Miller. I'm from Porsche Consulting. So Porsche Consulting, for those who don't know us, we are the wholly owned management consulting company within Porsche and the broader Volkswagen Group. So as the rest of the Volkswagen Group and Porsche take greater and greater interest in new mobility services, both vehicle on demand as well as mobility on demand services, that comes with it a breadth of partners that are required to bring those different services to the market that are very outside of the core business there, insurance being one of these. So we're very excited to come here and talk about some of the challenges that we're facing, ways that within the group we've addressed some of those, and are happy to speak with others about how some of those challenges have been, I'd say, addressed as well.
Hi, I'm Mitchell May. I'm with In the Car. In the Car is a specialty MGA, and our concept is to converge mobility and insurance, and that is all of mobility. So it's to take the world of insurance and put it into the actual vehicles that are coming out, so that when you obtain your vehicle, it already has the insurance placed in the vehicle. And we are a startup and love the plug-and-play environment. It's been incredible for us so far.
Excellent. Thank you so much, everyone. We're so excited to have such a great panel with us today. So for the first question, we'll kick it off with you, Yoshi. As far as right now, what trends are you really excited about in insurance or mobility, and the intersection and really in between? And then what technologies are driving those interests?
I think the nature of data is one of the key trend for me. They're very different from the one in the past. That means a lot of data qualities are different, and the data quantity is totally different. So it's a different, things totally different. So one of the example is that the telematics services. A lot of people are collecting a lot of information, like vehicle information or driver's information. So a lot of the insurers tends to differentiate the premium depending on such kind of things, but based on how you drive or how much you drive, something like that. But I think that's not enough for the insurers. So we are more seeking for more advanced services like claims. So as for the telematics services, for Tokio Marine, we are focusing on more advanced claim services to collecting the data and try to capture the moment of truth. That means what is the reason for having an accident? So we captured a lot of information, and so those kind of a dynamic data, we're changing our service level. This is, I think, the differentiate from the others, rather than the premium side for more advanced services. Yep, that's all.
Excellent. Thank you so much. Do any of the panelists have anything to add to that?
Sure, I'll come at it in a slightly different way, right? So Yoshi talked a lot about the data. I'll talk about the people. I think in terms of the first part of Shelby's question on the trends, I come from insurance, very siloed, for lack of a better word, industry. Rightly so in some sense, because you ought to optimize claims and claims handling, and you also ought to optimize risk for risk selection. So as a result, claims people are not always talking to actuaries and underwriting people. We've seen that. I think most of this room will agree with that notion. I see that changing quite a bit. And that's really exciting to see, right? So we have at Notto, as we've built up and led our insurance vertical, have seen lots of cross-collaboration from within the industry. I talked about the heterogeneous commercial line space, and I think there's also interaction and cross-collaboration between the personal lines and commercial lines as segregated as they can be, right? And part of the reason for the segregation is also regulation, very heavily regulated industry. And every time I go to an insurance conference or a telematics conference, I'm quite excited to meet regulators in the room who are trying to get their head around what to do with all this data, how to handle data sharing, how to handle data ownership, privacy, and the plethora of telematics companies and the veracity of the data. So I see that the trend is a lot about the people in this room and the people in the industry at large, both from within the insurance industry, but also enabling that by making, for example, claims a very low-hanging fruit and easy way to prove out the value of a new technology, and then take that learning and implement it in the rest of the organization to improve risk selection and underwriting. So that's been really good. It's also at Notto, I have the privilege of seeing not only the insurance space, but also I mentioned our OEM partners. So a lot of, earlier I used to say that the last thing that an OEM would care about is insurance, but I've changed my view on that because they ought to figure out, what to do with product liability insurance as cars become more connected and autonomous. And we see that with both OEMs interacting both with the largest of insurers, but also with the tier 2, tier 3 smaller insurers, small and large as determined merely by premium volume. So I see that as a very nice trend. Of course, there's a lot of, Yoshi touched on rightly so the data, but it's also about the people. So hopefully that's energizing.
And I think all the actual data that you have to get. So there's a lot of selection now on data because the data that you're getting is not necessarily reflective of the customer base because it's only opt-in data due to a lot of the regulations. So data is something that you have to be very careful with in how you analyze it, because you make larger assumptions off of a smaller pool, and that pool is not necessarily reflective of your base.
Yeah, great points. And then, you know, currently right now we're seeing really in our ecosystem with the insurance product changing a lot. You know, in the car, for instance, is embedding, you know, insurance at the OEM level, and Surround, one of our portfolio companies, is really providing insurance for sharing economy and micromobility assets. So, Josh, why would you say now that we're seeing such a rapid change in the way that mobility insurance is being made and sold?
So I think twofold. On the consumer side, we're starting to see different consumer trends and orientation in buying vehicles. So I'll give one example of this. The average loan term has been creeping up over the last years from 5 to 6 to now 7 years. And most of the research shows that consumers are really fixated on what is their monthly expense for owning and operating that vehicle. By that loan term extension, we're bringing some of that down. From the vehicle ownership side, those mentioned earlier, with insurance being the second largest cost for most drivers, being able to bundle that or provide that in a way that that conveniently rolls into either a single fixed cost or different ways to minimize that and provide that as the easier way to get new drivers their vehicles out the door has become an increasing interest from the dealer networks and subsequently OEMs. So on the consumer side, that's one piece. On the second, as OEMs start to take more interest in new mobility services, you know, there's, I think under the Volkswagen Group, well over 100 pilots either in flight or slated for the near term globally. That's 100 services that don't exist with that brand and may not exist in any way, shape, or form today that do require insurance as a component of that. So by necessity to bring these new mobility offerings, there's then a necessity to be able to identify, address risk from now new stakeholders who in the past haven't necessarily had a vested interest.
And I think in that you have the OEMs motivated where they weren't before to take that step now, to try, because you can't, you know, like Josh said exactly, you can go 3 years, 4 years, 5 years, 7, you have to stop at one point, because the finance company is, all you're really doing is leasing a car. You're basically financing out to take that car back, which presents a whole nother problem when you get that vehicle back on what to do with it. So I agree. I think that, you know, do you see, Josh, this industry converging into a transitional stage to autonomous vehicles where that convergence of, you know, warranty, gap, auto insurance, be it personal or commercial lines, converges into one entity, which will eventually give the data points necessary in order to be able to price autonomous vehicles?
I think we're going to see convergence from people paying, I'll call them subscriptions to their mobility needs, be it vehicle plus additional add-ons like that. And there will definitely be, I think, a transition period where we have a number of new mobility services that will need to have those, I'll say, better informed policies informed by some of the new data streams that we're starting to see today to build out that collective offering to a customer in a simple, you know, single price or single subscription element.
And then, Shobana, do you have any thoughts on that as well, as far as being part of the startup with Nauto for so long now?
Sure, absolutely, right? And I think as startups mature and prove traction, that we definitely see an increased appetite for larger corporations such as OEMs and insurers alike to have the willingness to experiment, and the kinds of questions that as startups get asked also start to change over time, which is actually quite interesting. So earlier it was about, hey, you're a startup, you know, how much data do you have, and what do you got to show for sort of what you have? So give me actuarially credible, you know, results, right? And so those questions have started to change in the sense that once you start to see some early results that are promising, the kinds of questions are, hey, can you help me scale? Can you operate in multiple geographies? And can you handle, and do you have the wherewithal to handle GDPR and different privacy requirements? And show me that your architecture can support that. So that's actually, as a startup, and sort of is a changing, sort of is a milestone, right? And I think as you see OEMs and insurance conservative, as Rob called it, corporations looking at that, I actually see that as a new leap of faith, that them embracing technology, which has been quite interesting. I think from the other part of the question was the intersection of mobility and and insurance. And so in the context of, one very exciting kind of partnership that I've seen is in the context of, let's say, a large leasing company that owns a bunch of vehicles that are used by rideshare drivers, either for food delivery or for passenger transportation, like in the context of TNCs. That insurance structure varies quite significantly in different geographies. Europe is different, the US is different, right? And one complexity associated with that is just period determination. How do I know that, Yoshi, you happen to be an Uber driver because you picked up somebody on your way from home to the airport, and how do I know that? Like I actually don't know that unless now I'm more smart about the data. I use machine learning perhaps to figure out that you picked up somebody, and so that period determination is necessary and challenging for both the insurer to determine as well as the ride-sharing company, right? So I think that we see more emphasis on understanding that, because the implication for the insurer is, how do I know what the incremental exposure is from a ride-sharing context? I talked a little bit about the European market. There I see that this leasing company may be self-insured, and they may have an insurance team within the firm, and that's advantageous to them because they can actually now start to see very quickly, much more than a privately insured firm, what the liability dollars are, both physical damage and liability, much more quickly. So they can not only assess claims frequency, which is usually quick, you can quickly assess that, but they can also start to get a view on claim severity much more quickly than if they were privately insured, just simply because of the inefficiencies created in the value chain. And so that's helpful because now you actually start to prove out the value of the technology even faster, because you can prove both frequency and severity effects. And so then, so if you put leasing and TNCs and insurance all together, like that's a big animal. And I think that that's quite interesting and exciting to learn about, and the geographic differences and the regulatory differences, and what the implications are to distribution. So I know I deviated slightly away from Shelby's question and perhaps went into the next one, but hopefully that sort of ties together what Mitch and Josh were talking about as well.
Yeah, exactly. That
And
definitely.
do you see a convergence of that data with respect to claims now that you have very sophisticated cars and sensors that improves the claims process, or is there still a struggle there with respect to being able to access that data? Yeah.
Great question.
Okay, I think for the claim services, yes, of course, we can leveraging all kinds of data. So how can I say? Especially, I think a lot of startups can provide us with a lot of solutions. So just say, the distraction is one of the Nautilus key strengths, but also like drowsiness or fatigue, how to detect those kind of things. And our mission is to how to reduce those kind of accidents. So I think we are still in the process, and that's the reason for Tokyo Marine is now collaborating with the insurtech insurers, such as Metromile we invested. So they have a data analytics capability and also very sexy user experiences. So everybody feel that more user friendly, and that kind of experiences is one of the key strengths, and I think the startups can, provide us with those kind of startups, the solutions. So we are very satisfied, and we are somehow to interact with those kind of people, and somehow to explore the potential to, explore the collaboration with those kind of startups. Maybe sometimes, OEMs. They also have the different kinds of data, especially for CAN data. So that kind of things much more, understand what happens and how to reconstruct the data, and they understand those kind of things.
Great. And then, Shobana, you mentioned this earlier, but I want to see if we can kind of go in deeper about, what are the ways that you think that we can heighten the collaboration between mobility enterprises and large insurers today? And do you have any examples of cross-industry collaboration?
Sure. I think I may have touched on one already, so I won't repeat that. But I think what are ways that perhaps mobility enterprises and even technology startups can improve how they help the insurer or the OEM operationalize the new technologies, to just clearly articulate what it takes to do I think one of you used the word pilot, right? And clearly articulate, what are we trying to learn here, and what are the shared objectives, and what are the objectives that are sort of idiosyncratic, either to the technology company or to the startups. And I don't think I'm saying anything new. You already know this. But I've seen the importance of being very precise about what are the success parameters of a study, and when do we know that the study has ended, and whether it has failed or has truly succeeded, and what are some criteria, and what are some timelines. And timelines are important because I think you can argue about who's slower. Is it the insurance company or is it the OEM, right? So I think that, and not call on my colleagues over here, but I think that that's important that the onus is really on the new technology company to articulate that very clearly. So there is definitely already a heightened sense of collaboration. I think I touched on that in the people comment I was making. There is also, just coming back to Mitch's earlier question on claims, we saw that very uninteresting flat line of the expense ratio, right? But that's just the expense ratio. There's another portion of another 15 cents on top of that. Every dollar of premium I earn, I spend another 15 cents figuring out how to adjudicate that claim, right? That expense ratio is actually a little bit improving over time. Why is it improving? Because folks like Tokio Marine, folks like other insurers have figured out how to utilize technology to improve their loss adjustment expense ratio portion of that expense ratio. So that's nice, because I not only now have a better view of how to settle a given claim using better, richer, more robust data, but how to do that more quickly, and what does that get me in terms of incremental loss adjustment expense dollars I've saved, and it proves out a clear bottom line impact very quickly that helps the insurer then figure out how to scale that. So I thought that was important to mention, because it is a valid, a very meaty use case that is used by the insurance industry. And I'm personally excited to see and talk to more and more claims executives in our insurance conversations beyond underwriting. So it touches mobility to some extent.
I'll share one example of a collaboration opportunity where an OEM and an insurance company actually got a bit further out of their typical operating area to try to provide solutions towards mobility fleets that would help them turn around damaged vehicles faster and get more consistency in the amount that they were paying out for different accidents. So this was a collaboration with an OEM where they started developing a tool with an insurance company that they had not worked with in depth in the past to look at the accelerometer data on a vehicle at point of impact and some of the other sensors around the vehicle to try to reconstruct what areas and what extent of damage that they expected, be able to then automatically create a bill of material and then work with the insurance company to provide the repair estimate and a turnaround estimate within a network of repair facilities that they worked with. And this was very much facing some of the mobility fleets where uptime and availability after the accident, as well as better insights into, okay, should we get single or multiple quotes which extend further downtime when they did have damage incidents, being able to reduce that on both sides became kind of a new offering that these two developed and piloted together, really targeting kind of this new mobility ecosystem. So I'll give that as one example, and another that I don't think we've touched on yet is really the changes in the risk based on some of the vehicle technology itself. So if we think of anyone who's rented a car, has a later model vehicle, it's almost impossible to back into something today. So with backup cams and backup sensors, 80% reduction in people damaging body panels when they're simply parking cars. So as the technology matures, we continue to be able to reduce that risk as well, which has started to open up discussions around how can you create now business models to package some of that with potentially different, more tailored insurance policies that can again be bundled, as Mitch was saying, at point of sale for a vehicle or towards a fleet purchase.
And it gives the OEMs justification now on all of this new technology. So everyone was rushing to put technology into vehicles, whatever vehicles they were, in the plan on going autonomous. But now it gives immediate justification to those sensors and to that technology to be able to go back for their customers and say, hey, we deserve a lower insurance rate, not because of these sensors, because look, we can't back into anything, and you're rating me as if I could back 3 years ago. So I think all of that is, like Josh said, coming to a convergence, and to the previous point, it moves slowly. OEMs move slowly, large insurance companies move slowly. This is a large process, but I think the world is going there, because I think now you have an environment where the OEMs see that you're going to go to autonomous. And in the interim, I can't keep raising, my payouts from 3 to 4 to 5 to 6 to 7 to 8 years, because my customers just can't pay that back. And the second largest cost in an auto, and certainly sometimes the larger cost in a commercial auto, is the insurance. So the only way to adjust that for the customer to be able to afford that mobility is to look at the safety features and take a good hard look at the cost of insurance, and let the OEMs, whoever they are, be able to negotiate that, which they haven't in the past. They've ignored it.
I think we should regard anybody or everybody. We don't regard as anybody as a competitors. Everybody should be collaborate each other. So these kind of mindset is, I think, necessary. I mean, for insurance companies, we don't, OEM has a lot of data as well, but especially for claim side, for insurance has, medical treatment data, the repair shop, labor costs, a lot of things we also have, every kinds of, the type of model or make, so that, those kind of, for each of us has a key strengths. So that I think we should collaborate, and maybe we have to do not afraid of be as a competitors, and just should be open discussion. That kind of things is much more important for us.
Yeah, and I agree, and I really see a convergence of the two fields. I see insurance and mobility convergent. I agree with you. With data streams from automobiles and the insurance company's use of that, I see a kind of a hybrid of that model being kind of like an auto insurance joint venture rather than a competitor, because it makes a lot more sense, because at the end of the day, and maybe I wasn't specific, when I say customer, it's the customer. It's the OEM's customer, it's the insurance company's customer. Everyone at the end of the day wants to make the customer happy and make a sale.
Most definitely. And then building off of that too, Mitchell, as these two ecosystems are really intersecting and merging, I'm curious to think how you think an insurtech startup would be able to pitch to a mobility firm, and similar to how a mobility startup should pitch to an insurance company, and what different elements maybe that they should emphasize or be aware of.
So I think the first and foremost is you have to listen to the people you're pitching to. It's really, a lot of startups, us being one, you go in with this preconceived notion of what you have and what you want to be and what the OEM should do and what the insurance company wants to do. And I think what you really need to do is go in with a solution that they need and listen to them as to how they want to implement that and how they want that utilized. And I think that's a point that's missed by a lot of startups, ourselves included in our early stages, is you go in with a preconceived notion, and at the end of the day, just like the OEMs have clients that they want to sell to, just like the insurance companies have clients that they want to sell to, startups have clients that they want to sell to, and you need to listen and accommodate your client.
Yoshi, do you have any thoughts on that as well, coming from the insurance side?
But already I covered. Yeah, so nothing special. Yep. Okay.
I'll add the word empathy to what Mitch said, right? I'm still working on this, so I shouldn't be saying this, but I think empathetic listening is important, right? And even over the last 4 years, as Nauto has grown, I've learned to try to be more, consciously be a little bit more empathetic when I start to hear the same challenges and the same stories. To some extent, it could be frustrating because you're like, okay, I'm now in the same boat. But there are some true challenges, and there are some real challenges that that are realities. And so how can a new technology company come and articulate, okay, so here's what we would do first, and here's how I actually help you operationalize. And I think that just requires better communication and better cross-functional and also cross-industry collaboration. So I'm not saying anything new here, but the empathetic listening has also been important, and also to some extent speaking the language, right? I think coming from the insurance industry, sort of I grew up learning frequency and severity and loss ratios, but I realized that it's even as simple as it may seem. It's actually doesn't come across that way, and there's a lot of unnecessary complexity and terminology. Not unnecessary, but but there is stuff to learn, right? Just the language. So I think that has also been helpful. From an OEM standpoint, Josh, I don't know if there are some specific things that analogous to what the insurance industry sees. I'm sure there are some industry-specific idiosyncrasies, but that has also been important.
I think to share maybe from both the OEM and I'll call it new mobility service landscape, just having an understanding that what it takes to engage with either a large dealer organization, a OEM's finance organization, or one of the innovation hubs that's focused on launching new mobility services, it's going to be a very different level of expectations in terms of both maturity as well as ability to move at pace. So a few comments in jest around OEMs maybe building fast cars, but maybe not moving as fast internally. For a lot of the core business, we would like to move faster in some areas. However, the opportunities with some of those smaller mobility service groups that are launching pilots in market with hundreds or thousands of vehicles, testing the waters on those different services, the barriers to entry are much lower, particularly for startups that may not have a multi-decade track record of some of the legacy providers.
Excellent, thank you so much. As we're closing out our last 5 minutes, I wanted to see if there were any questions from the audience that we would like to ask the panel. And if you submitted them through Slido, we're going to go review for that right now as well. If not, I do have a last couple questions, so we can always kick off with one more. Okay, perfect. So, and as far as, with last thoughts, as far as what do you guys think that the industry, insurance industry can learn about the digital transformation process from the mobility industry?
So I think it's a collaborative effort. Like Yoshi said, I think you really need to look at it as a whole. I think you can't just look at anymore an OEM viewpoint and an insurance viewpoint. I think that kind of where we need to go is to have that meld. To Josh's point, you can't keep going longer and longer on these loans. You have to keep your customer happy, and I think the OEMs and insurance companies working together to improve loss ratios based upon new technology and to bundle all of these different insurance products will eventually accomplish that goal. It will keep a happy customer and keep people into automobiles for as long as that lasts until we move on to autonomous, which we'll move more to the fleet and shared drivership subscription model.
And maybe just to build onto that as well, I think don't lose sight of, I'll call it the internal value proposition. And especially as we go through a wave of increased fleet ownership for mobility services, larger dealer fleets that are out there as both loaners and starting to build out VOD services as well. And I'd say all the collective interest between the OEMs and insurers. There's a lot of opportunity now that we have these larger, ever more expansive data sets to reduce operating costs, improve customer service. And there's still, I'd say, a lot of space to go there. That with OEMs, dealer networks, and insurance companies working together, we can continue to provide and expand the breadth of services that those providers are offering beyond the sale of the car and the sale of the policy.
Yeah, and I would add one thing. We need to include in this discussion the regulators and governmental agencies, which are going to end up making ultimate decisions on whatever we decide anyway.
I'll come back to that bullet point that really stuck with me, the flexibility and the yoga. And I think the flexibility, right, the bullet point that Rob put out in his keynote, flexibility. And I think the importance of the word flexibility, what are some, in the context of regulation, right, what are some areas where regulation allows us to be more flexible in order to actually operationalize technology? So one example could, merely in the context of auto insurance, P&C auto insurance, it could be, how can I help as a, we all know the commercial auto is much less regulated than personal auto in some ways, where insurers can provide different kinds of incentives for their policyholders in order to encourage adoption of new technology. So it can be as simple as just the semantics between the words premium discount and premium credit or underwriting credit. It can be sort of some about the semantics, but really, how do I encourage a new fleet company or a mobility as a service firm to adopt new technology that helps both the OEM as well as the insurer the ability to utilize that data, leverage the analytics. So I think the word flexibility then, that points to really the regulation and the flexibility on part of the insurance company to figure out what's allowable and what's permissible and what's not, and what you can do in a viable way. So I think I'll take back the word flexibility and really sort of think about what are ways that startups can be actually more flexible. Maybe we can also put our economic skin in the game in order to encourage the corporations that we work with to co-invest in the adoption of some of these technologies. I think there's flexibility required from every entity in order to actually make this happen and operationalize adoption of improve connectedness and when it goes back to sharing and autonomy.
Oh, sure, yeah. I can bring the mic over to you.
Well, thank you so much for your insights and the connected, OEM, mobility, fleets, and the insurance, everything, like how it ties together. My question was, since I'm working in the insurance side and using telematics, and the biggest struggle, I think maybe it's overlooked, or maybe we are so focused on what we are doing and what we bring best to the table. Sometimes I feel that we lose sight of whether the customer really understands the importance of the insurance and how everything ties together, because that end-to-end connection is never spelled out clearly. So even though we have so much of technology bringing into the space, but sometimes for the customer, it's still a huge cost. In their mind, it's still a huge cost that they are paying, and they don't know when it's going to materialize till the time the claim comes, and that's where the insurance becomes alive. So my question to the whole panel is, what do you think in terms of education to make the customers really aware and educate the importance of each aspect and how it ties to not just the premium aspect of it, but how it ties to really help them in saving the overall cost of fleet management, in terms of risk management, in terms of when the claims arrive, how each of these things can really help them in a longer term and not just the short term in reducing the premium. So do you see there is a lack in education, and what can be done around that?
So I'll give the mobility perspective maybe in two ways. So if you look at individual customers for individual vehicle ownership, there is that gap in perceived value. A few areas where we've looked, both with insurance as well as connected services, where there actually is a willingness to pay and there is a perceived value, is around a lot of the safety and security and some of the convenience features. So if you can tap onto those value drivers and you can build value-added services around that, that's usually then brings up the willingness to pay for those in a discrete way. One theme that I'll mention around all of the vehicle on demand or mobility on demand services is, when you as a consumer select, I want an Uber X, XL, whatever, you're not selecting, I want my Uber X with this insurance, or I want Porsche Passport with this insurance. It's all bundled, and I think increasingly we're seeing that bundling happen with both value-added services, the vehicle, the ride access, et cetera. And insurance plays an enabling role in the background, really more so in terms of conveying, I'll say, the safety and certainty that you have getting into a stranger's vehicle or mobility services, a $100,000 car that you're liable for but don't own for a day. How is it that insurance can give you comfort that when you're enjoying these different modes of transportation, you're covered without necessarily monetizing it in a discrete way, but justifying some of the premium that you're paying for that mobility solution?
Perfect. Thank you so much. That's just about our time for today. So everybody please join me in thanking our panelists for joining us today. All right. Thank you so much.